The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour this Tuesday. Oops, I'm getting an echo there. Let me just fix that up. It's not so good. Now, how am I going to do that? I can't hear it over there. Okay. All right, so here we go. We've got very interesting market here because we keep getting getting closer and closer and closer to the all-time highs, and yet we just can't actually make it to the highs. And what's even more fascinating is that the New York Stock Exchange has already gone to an all-time high. So let's go through the numbers. We've got, well, thank you, Steve, for 2 great hours. We've got programming right through the day, every single hour today, and right through to Tom O'Brien, wrapping up 4 o'clock till 6. And we've got the Dow down 85 at 16,445. The S&P is down 833 at 1876. You got the comp index down 24 at 4,113. You got, let's see, you got gold down $1.70 at 1307. Silver's up 0.07 at 1964. Platinum is up 6 at 1455. Whoa! Oh, no, it isn't. Copper is up at 3.07. Let me just check that out here. At HG. Yeah, this is very interesting. All right, I'll have to update it because I had to redo a whole chunk of charts yesterday. Well, for the last couple of days. So I'm just going to see here. Let me move this away. Okay, B possibly in the weekly chart, and that was an E in the week and the daily. Okay, yeah. So high grade copper has rallied quite nicely. It needs to hold above three, and it needs to try this week. In fact, needs to try for the 3.15. If we can do that and hold over 3.15, that'll be a good sign. And you've got bonds up 30 seconds at 136.01. Crude oil is up 28 cents at 99.76, still acting quite weakly. And you've got the dollar down 37 at 79.16. Euro is only rated a little bit, and the G, let's see. Yeah, I think that's about, I think I covered everything. Yep. Now, there are a couple of things I wanted to do here. Let me just first of all show you that the E-minis, and for my subscribers every day, I give the parameters. I gave 1869 as pretty much the low that needs to hold this morning. We've gone to 1868.50. My suspicion is that this is still part of the process of a high-level consolidation that has a really good chance for how can I put it, for a rolling upside push, and that rolling upside push allows for a modestly higher high in the Dow, all-time high, same thing in the S&P, and then I think we get ready for a weekly peak C. So that would be maybe next week. And then we should see a pullback. And then there should be in May a leg D in the weekly charts. And then we've got to be very careful, because if the rotational aspect is not concluded, then you'd be looking at some of the high flyers that were running very strongly before, having a little bit of a counter trend bounce now, at least attempting to, well, this is going to be interesting, to hold, and if they don't hold, they'll retest the lows, the most recent lows. So this is a very important period, and it's, and how can I put it? Let's just make it real simple. If the volatility index, which is trading right now, VIX.X, is trading at 13.54 and should in fact be giving you buying pressure, if that doesn't allow for higher prices, then the moment this volatility index starts to go into its 1353, starts to go into the 1490, 15.30 area, this market will be pulling back, and it'll pull back towards the how can I explain it now visually? Think of a rectangle, and it will go. The prices will go towards the baseline. Absolutely imperative that the Dow holds 16,000, and that would be 446. So that would be around about 1832-ish on the S&P. Okay. So we've gone through that. We've got our first call, and let me just get myself set up here. AAPL, Apple. And hi, Nahed, how are you?
Very good, thank you, Basil. What I would like to get your opinion on Apple is I want to buy Apple for my son for long investment, and I'm trying to figure out where do you think I can get in, or is it just I might as well get in now and get it over and done with. So if you would please look at it and see what you see there, I would appreciate that.
So Apple right now is in leg C up in the daily chart. The weekly chart has a very interesting pattern because it's broken out, and it's either a brand new leg B or it is a cup breakout formation that's gone to an E. So now I need to look at the stochastic and the MACD and say, okay, if the stochastic was trading at 87 to 91% and flattening out, I'd have absolutely no qualms and say to you, I would be buying Apple, and I would treat it as the starter position. Now, I don't mean a starter position in the number of shares that you buy. I'm talking about a starter position technically, because if within that context, Apple held very well, and every pullback in the market was met by support in Apple, trading at 600, but it held the 560 to 550 area and then kept coming back towards the 580, 600 area over a period of 2.5 months. And the stochastic in the weekly chart was improving all the time, and then the monthly chart started to see the stochastic go from 81% to about 80, 88 or 92%, then I would feel very strongly that that was a position that you could buy and let the position tell you whether or not it's going to be a long-term buy and hold by making modestly higher highs and higher lows. Now, if that occurs, that would be saying to me that you've got a potential here of a buy and hold, and that when the market's completed its corrective process, starts back up again very strongly. In other words, the Dow now is trading in in the future is trading in the 17,200s or higher. The S&P's broken out and is now in the 1920s. Then I would say to you, hey, now you've got something that you can hold for at least another year. So I'm going to tell you that there's another way to do that. And the way to do it is to make a starter position, treating this as a potential buy and hold, because let's face it, Apple has the versatility, the robust quality, and the viability of being, they've got the money, they're able to do a lot of things. The way they have not performed in terms of new products over the past, let's call it in 2014, has been met with a very buoyant stock for many other reasons. Now, there is a gap between the 560s and way back down to the 530 area. I suspect at some point, some part of that will be filled in. But if you're talking long term, the real issue is this leg D in the monthly? And therefore, the next decline is going to be one that really pulls it back sharply under 500. I think that's really our big issue here. So I'm going to make the suggestion that you treat this as like a three-part investment, long-term investment. The first part is that you start a position right now at 600.
Right.
Knowing that the 620 to 630 area is probably going to have a lot of resistance, but if it could even get there, it is basically saying that I'm probably raising the base over the longer term. That's number one. But number two is The second position I would put into the 560 to 540 area. In other words, that's 40 to 50 points down. It's talking about a 9 to 11% correction in Apple over the coming 6 to 8 weeks.
6 to 8 weeks.
That you might not get.
They're splitting in June. June 1st, I think they're splitting 7 to 1.
Wait, you say that's the next earnings?
I believe they're splitting 7 to 1 in June 1st.
Ah, they're splitting. Oh, of course. I forgot about that. Now, of course, we know that the split should mean nothing because the split is taking a pie and just cutting it into 7 pieces and it's still a pie.
Right.
So I don't think I'm going to, all right, all I can say is with the split, that would be 7 divided by whatever it is, and that would make the 560 level. I'm not going to be able to do this. 7 6s, 7 7s, 7 8s. About $80. Right. So it'll be below $80. Is where the next position would be put on. So I'm having a tough time in terms of saying to you, very long term, Apple's a great company. I see only a risk of 10 to 12%. Therefore, you could buy quite a chunk right now. I would rather say to you, start a position now. And if it goes higher, that's wonderful. It's a long-term position. You can always add a little later on. It might be at a higher level, but you've done a reassessment after the split or whatever it is. But if you got in now with a particular position, I don't have to tell you what percentage, but you're getting in, I would say that the next level of entry point should be, and you probably have to write it down because it's going to be really hard to do when Apple suddenly drops 9 or 11% to say that's where I'm buying it because that's where I said I'm buying it.
Right.
But I would do that. I'd buy it into the gap, and I would leave a third position that I would not even have a price. I'd just keep it there and say if there's any, today is the anniversary of that flash crash. So if there's any crazy kind of sharp pullback with no, how can I put it, with no fundamental reasons within Apple that say that Apple is just not a buy at all. But so far I see nothing like that. I'd probably say that when they use up a big chunk of cash, that's probably where you got to be somewhat careful. But I'd have another third position to put in. Make it some ridiculous price, like $480 or something. And hope you never get it because it just keeps going higher. So that's one way that I would do it. So a starter position here, an add-on position about 8 to 10% lower, maybe 11 or 12, but it would definitely be in the gap. My ICE is 555 to 550. Hope that helps you, Nahid.
Thank you so much, Basil. I really appreciate it.
Thank you very much for calling.
You're an active trader looking for that extra edge when it comes to trading and investments? Then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back, and what's very interesting, well, the Dow's down 79, S&P is down 6.84. I like the fact that the S&P is stronger than the Dow. I just wanted to talk about this for a moment. Just got an email sent to me about taller is better as bold London skyscraper bets pay off. Isn't that interesting? So they've got these buildings. I have to tell you, this is nothing personal, London, but I just think that the British architecture, the modern buildings, I've just not been happy. There's this bullet-looking building that I remember seeing the first time I saw it being built, and then I saw it when it was finished. And I thought, what on earth? What are they thinking? I've never liked that building. Now they've got another one. They call it, they call them, let's see, they call them, so you've got that space shuttle thing. Then they got the walkie-talkie and the cheese grater. They give them nicknames. And they stand out, they're like a sore thumb against the maybe 14, 15-story buildings that you can get in London. Yeah, I don't like that architecture. When I look at some of the international architecture, the buildings that are being built are just, some of them are so exquisite. They're like an Apple product, just a total work of art. Anyway, so I thought I'd mention that. That was number one. Number two on the agenda is within this market, I just wanted to show you a couple of things here. Look, the NYA.X, that is the New York Stock Exchange, and the New York Stock Exchange is, in fact, NYA.X. It is a very broad mix of stocks. And within it, you've gotten to the 10,676 level. That has started leg C in the weekly chart. Now I'm going to open this up because I want to take a moment. I want to talk a little bit about the longer term charts. This is I did with Nahid a moment ago. When you're looking at the longer term, I'm going to expand this a little bit. If you're looking at Tiger TV, this is a beautiful chart to be looking at right now. And here are the points that I wanted to make. Within the context of this black line, just for now, I want to see if I can make that very thick. So here we are, format, 9-period exponential moving average, scaling, no, not scaling, color style. So I'm going to make it just for the moment. Hopefully I'll remember it. Look how thick that is, okay? That line, look how it has been beautiful support. It hasn't closed since the June of 2013 at 88.14. This is the New York Stock Exchange. It has not closed under the 9-period moving average more than 4 times. 4 times in about 9 months, right? 10 months. May, June, it's almost 11 months. And within that context, no, let's just be more accurate. That's from that moment. So that was on the line. That was over the line. That was under. 1 on the line, 2, 3, 4, 5, 6 times. So 6 times. And when you're looking at something like this, you can't, how can I express it in visual terms if you're not looking at it? Imagine that there's a trend line that's wiggling its way up, higher highs, higher lows. And about ½ an inch above it is like, let's call it like a Bollinger Band. There's a band and it keeps containing the price. There's also a ½ inch down that contains any sudden spiral to the downside. But the number of times the bars have closed above that black line, the 9-period moving average, going towards the up, in this case I'm treating it as a straight line, an up trend channel. It's called the inside track make it red, with a repellent line and a green propellant line. It says once above it you can keep going higher. And it says that even in the past 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 weeks, 2.5, 3 months, what we're looking at is there's only been one red candle below the 9 EMA. And that's saying that the weight of evidence is suggesting that there still is an upside bias. But wait a minute, upside bias? We went to a peak B on the line, but we went to a peak C way below the line. So within that context now, you're starting to say, oh, but it's struggling to break out. You see, I like to read it in the context of what's there. So with that perspective, what I'm looking at is the stochastics at 84%, and that's good. That's strong. I get the music. So we'll be back in a very short while. And the MACD has just gone back to...
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman, Tech Technicians Hour. Dow's trying to come back. It's at minus 80. S&P's down minus 770. I'm a little concerned here because General Electric, which kind of led the way up, is having quite a bit of a dip here. It's down 26.28, down 1. We tried to nibble on that this morning, and we're out already. And was about a minus 1.2 loss or something like that. But I'm not happy with that at all. Just two things. We're going to go to our second caller, but I just wanted to say, yes, just a question was asked. Yeah, they do like to nickname their buildings in London. That's number one. And number two is this whole thing is about the cost of footage, and that is now far more preferable to build vertically. So taller is better, as bold London skyscraper best pay off. And that's what happens with governments. They tend to see things as taxes, revenue. They call it revenue, but they're taxes. And they start changing the parameters of different sets that are constructed for space, light, height, paving, street, etc. For future buildings. All right, let's go to Ari in Arcadia. Hi, Ari, how are you?
I'm doing very well, Baz. By the way, building vertically, real estate is expensive. Vertically, where real estate is cheap and taxes are low, you build it horizontally. But where there's concentration of people, you have to go vertical.
You have no choice. Space is limited. Yeah, absolutely. So
I remember in New York City, I mean, they talked about inches. I mean, they talked about feet. I mean, their pricing was in concepts of feet and inches. So,
absolutely, it makes a difference. Well, when you look at Manhattan and you see the distances between buildings, if there is a space between, and then you just wonder, why is there that 5-inch gap or whatever it is? You understand, it was to do with the bylaws. It was to do with a whole bunch of things, safety concerns, etc. So, Ari, we were looking at XONE recently, and you were waiting for a leg D. It's just done a D. What's the story now?
yeah, I am thinking of removing some, not a lot, but removing some and maybe picking it up again at around 32.50. Yeah, I also got an A on the weekly.
Let's just give. Well, let's do a couple of things first. I just want to explain to our listeners. We're looking at XONE is the symbol. It's called the X1 company, and this is one of those this is a 3D manufacturer. And what we're looking at is the doji low of 24.34 that was made on the 15th of March, April. Created a really nice V-shaped reversal, and then it stalled a little bit, so it went to peak A, peak B, pulls back, holds the 9-period moving average, goes to C, pulls back with an inside bar, tests it the following day, right on the 9-period moving average, that black line, whoosh, today it goes up to leg D, and we needed a D in the, I just want to double check, I had to redo this, 30.50, 30.52, so that's A. I thought so. I remember doing this before, but I lost it, and I had to redo it again, so that's D. And so this is actually a potential E to F in the 120-minute chart. So if this is E, and that's an F/B. I'm going to put it as F/B for now because it hasn't crossed negatively and it's holding above the 200-period moving average. So here's my recommendation, Ari. I think you're absolutely correct. You had a particular target. It has met that target. It made a high of 37.80. That's 13 points. I mean, 24 to 37. We're talking about, what was about a 47% gain? Wait, what? No. That's more, right? Yeah. So what we're looking at is a pullback that could take it down to 34.24 to 32, yeah, somewhere around 33.50. So what I would, this is a tough one because it's being one of the leaders to the upside, but I think money management is absolutely at the forefront. So here's my recommendation. You haven't taken anything off, or you've taken a little off already?
Taken a little off already.
Okay. Then I'm going to suggest you take a little more off right now, but you keep your core position. And I think you're absolutely right. If there is a pullback over the coming 2 days, there might not be because this is one of the leaders and it's holding at 87% in the stochastic. So imagine if there's a sudden slide and it goes underneath the low of yesterday, which was 33.75, I would start thinking of putting something back that you've taken off. Why? Because the weekly chart is starting to improve. It says that this is leg A, but the candle that I think is really the one that's going to be tested is the candle of the 21st of March that has a high of 43.95 and a low of 35.14. So I'm thinking in the middle where it opened, which was at 43.95. I'm not saying that that would be my upside target, but I like to have some kind of a goal, and I like to see that it coincides with something else that I'm looking at, and that would say that the monthly chart is a 9-period moving average of 43.83. So here's what I'd be looking at. I don't even want to talk about the 40s when we're at 35.77. I do want to talk about 37.81, which would be 1 penny above the high that was made today. And if it closes above that, it says finally you've got follow through that says even a leg D with a potential peak D didn't affect this stock at all, because what will happen is it has to improve the 120-minute chart. And my eye says the 120-minute chart actually looks like 36.61 to 34.67. Could be a little bit of a trading range for the next day and a half. So I would, I'd take some off, and I'd be prepared to take some back, but I would try to keep the core position because it has led up, and in fact, it could be telling us something about this stock going into, say around about the 15th of May, about a week, next week sometime. So congratulations on a great trade, Ari. And yes, so while we're at it just now, I want to go back because I know that sometimes I stop in either mid-sentence or in mid-thought because we've got a caller or something's happening. But I've got the NYA and peak B. It should go above 10,676 to start leg C. That's the way I'm counting it. Now, there could be an alternate count. I don't see a reason right at this moment to think of it as an alternate count. That's what I'm staying with right now. And that's going to help the weekly chart to rally. So, and then that's the thought I wanted to finish. And then after that, we'll see how that resistance comes in and what we can see on the downside. Meantime, back at the ranch, I had some questions here. Questions came in to ask any thoughts on LOPE, L-O-P-E. I think it's an educational, I used to have this. I keep saying I really did have these notated. You know that because I've shown them here. But it takes me a second. I'll just do this right now. A, B, C, D. A, B, C, D, E. Okay. This is Grand Canyon Education, Inc. It made a peak E in the monthly chart, holding the 9-period moving average of 42.83, trading right now at 45.10. The monthly chart says, I have no choice but immediately to do this pattern right here. There's no apex on the left, but I'm going to do it visually and say, this is the pattern I'm looking at. And it says this is sometimes a topping pattern, so I've got to be real careful on the monthly because the stochastic's pulling back at 80%. The MACD is pulling back in the 9 differential, but the slow-moving average is moving very nicely to the upside. The weekly chart has made 2 sets of H's, and this last H has held nicely. So this says to me, have a look at the daily, because if 44.25 to 44 is taken out, it means one thing. And if 42, whoa, that wasn't 42. If 46.74 is taken out, that's a positive, and that'll mean something else. So now let's go to the daily. I should have asked, the question is, Peaky, are you long, or is it just a question? But in the meantime, what I'm looking at is, this is a very important moment for LOPE. I think it's just stuck right now. And if you're long, I just say make a stop. 44.35 is where I'd be a little careful. I'd take something off. But if by the end of the day, instead of being at 45.10, it is closer to the high of 45.39 or higher, that's exactly what I want to see. Why? Because then you can tackle the doji candle of the second and the high of the first, which was 46.74. If LOPE breaks above 46.7, doesn't even have to close. It just has to break above it. No, it has to close above it. Otherwise, it's starting the H pattern. So if it closes above it, that's a very positive thing. And it says the next target would be 47.89. And I just go one step at a time. This is no position. Okay, those are the parameters I'd look at. Okay, so I believe Larry, we send our absolute best white lightning to you. I know it's been a little difficult for you, and our thoughts are with you. Wish you just everything of the best, and we really miss you here. And that was just a quick note. Just we want Larry to he's feeling a bit better, but not 100%. So, all right. So LOPE, Grand Canyon Education Resources. The next thing is Z. Is that right? CRE. Is that CRE? Nice pop-up. Yeah, nice pop-up off the lows. A little early to tell anything more than that. I'm not going to. Okay, not much there. All right, so those are the questions. Now, I need to just check two things. Yeah. So I'm just answering my engineer, just to say that I'm still getting the echo, and it's kind of irritating, but I really cannot do anything about it right now. I'll just do the very best I can. I'll spend some time later on afterwards and figure out what. It was just doing the earphones were great yesterday, but the charts weren't. Today the charts are fine. Your phones are not. So you just let me know, Al. Thank you. So let's just do this. I want to spend a little more time on the volatility index, and the reason being, in the 13.40 area, that's not the issue on the daily. The daily is one thing, but the weekly is really the issue in terms of number of bars. Let me explain. The peak to 2191 on the volatility index at 2191 on the 28th of June 2013 made a U pattern with the middle like a W. Think of a W, but it's a U that has a W within it. And it took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Was that 15? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Yes, 15. I thought I remembered 15. I'm just going to put a little 15 here for my own. Okay, I'll make it gray so it doesn't interfere with anything. 15, and then it made a high at 21.34 the week of the 11th of October of 2013. And then it took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. 2 weeks longer. And it made a high, again at a peak B, and we call it a peak B minus because it basically failed. And what was the price at that particular point? The price was at, what is this? 21.48? Yeah, 21.48 on the week of the 7th of Feb. All right. And now we've got 1, 2, 3, 4. Oh, sorry, I meant to mention that even in the very big one back in 2013, no, was that in December? Yeah, December of 2012 at 23.22, also had little like W formations within the larger U. All of a sudden, what we've got are a number of little patterns within, since that high at 21.48 back on the week of the 7th of Feb, but it's flattening out. And it says, watch out, because 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. By the time we got to the 13th, in most cases, we're already on the way up. So if this is going to be different, in other words, if this is going to be a significant breakout to the upside, Dow 17,200s and higher, S&P 1920s and higher, then what I have to look at, and we've got a break coming up now, is where or when would the VIX start to break above the 9-period moving average, close towards that trend line in the 15s. I'll be back straight after these messages.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. the king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Folks, we're back. A couple of questions in the day, a couple of emails, so let's just go right to that. The first one, and let me go, is IWM. Good question, because I want to look at IWM. And what I've been talking about in terms of the IWM, and I mentioned to my subscribers on my opening call this morning, is that the IWM and the Qs are probably not going to make new recovery highs as the other. That's another reason why I think it's going to be nominal new highs in the Dow and the S&P and the New York Stock Exchange, and then a pullback, and we'll see where the IWM, which is trading at 110.11, down 78, that's the Russell 2000 iShares ETF. It's made an H pattern, and then another little mini H pattern, and that 109.85 level at 111.11, it's just 1.5 points lower. But if that 200-period moving average gets pierced, then 108.66 is going to be absolutely crucial, because if that breaks, then you're talking about a monthly chart that has a left side, right side price time match. Let me see if I can get this open right now. And that says that somewhere in May, you got to be careful that, let me just make this red so that you know what I'm doing. There are red, left side, right side price time. It says somewhere in May, probably towards the end of the month, you might see a test. I'm having trouble. A breakdown under 107.27 says 107.14. The low of the 8th of November will be next. But that would be tentative if it closes below that. So it's at 111. I'm suspecting that over a period of a few weeks, you will see the 112.94 to 113.90 area become very strong resistance. and then later on we make the arch formation and we start to come back. But at this particular point, I see the IWM just in the trading range, and the trading range has the high of 113.12 to pierce, to be able to go higher and sustain it. And certainly, as I say, 109.85 to the 109.32 area is going to be really important support. That was the IWM. Next question was Z, which is Zillow. Zillow's acting very well on the shorter term. I believe it's going to go above 111.35, the last peak. And the weekly chart is in leg C. It'll be a peak C if 111.35 is not taken out this week. I think it could be. And if it does, it extends it. And then you have yet another weekly chart in leg C. So that's a Zillow. Most importantly, if it at 106.39, Z is the symbol. Zillow, of course, is in the real estate business. And what we're looking at is 106.37 minus 157, watching it closely. Because if it was to fail from here, then I'm going to have to call it a G instead of an A. A is very positive. A G is less so, certainly. And it says that under 99, under 100, the close under 100 says, uh-oh, this is in real trouble, at least in the shorter term. So the next question was Yelp, Y-E-L-P. This is one of those services icon. You press it, you click on it, and you can tell where the restaurants, service stations, whatever it is in the area is near you, etc. Made a peak D in the monthly, trading at 56.02, down 4.17. Now that spike it had the other day on earnings, everybody said how wonderful those earnings were. That belies the fact that it's pulled back from 101.75 to 56. I would have to say that's getting close to a pretty darn good decline, cut in half almost. And that pattern that I'm watching now says, don't go under 54.68, because if you do, you're going to test the very critical 52.40 level. So, folks, that's me signing off right now. Have a great rest of the day. I'll be back tomorrow. And right now, what I'd say to you is watch the volatility index closely. From 1338, a close over 1360 says be careful. But right now, I think we're going to be moving higher this week. Have a great day. Stay tuned for the options. I'll be back tomorrow.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN,